And welcome to Business Incorporated live on Channels Television. Here are the stories we're tracking at this hour. The African Development Bank approves $35 million to strengthen Senegal's public finances as the country steps up fiscal reforms. And Canal secures exclusive UEFA club competition rights across sub-Saharan Africa. We see oil prices reverse sharply after U.S. signals a Strait of Hormuz agreement could be reached this week. It's great to have you join us. Let's kick off now. What's playing out with markets that we track? We see oil prices. They were holding on to recent losses as markets weigh, mixed signals over U.S.-Iran diplomacy. President Donald Trump saying negotiation with Tehran offers a last chance to end the conflict, but Iranian officials insist no talks are taking place. The conflicting messages are keeping traders on edge at this point. I would see basically oil prices, moving up and down there. Natural gas, $2.75, 0.86% low. Let's flip over to metals now. Let's see what's happening with the metals market. We see it's mostly green on the screen. For the metals market, spot gold, 0.35% higher, $4,105. Spot silver, 1.88%. Higher than most of the metals that we track at this one. They're holding steady. Investors are weighing the outlook for U.S. interest rates alongside, escalating tensions in the Middle East. Traders are waiting a fresh round of U.S. labor market data for clues on the Federal Reserve's, next policy move, while geopolitical uncertainty continues to underpin demand for, safe haven assets, keeping the bullion prices within a narrow trading range. Now, let's flip over to all the stories. Canal they're strengthening their grip on Africa's sports broadcasting market after securing exclusive rights to UEFA's men's club competitions across more than 40 countries in sub-Saharan Africa. The agreement covers the UEFA Champions League, Europa League, and Conference League from 2027 to 2031, expanding access for football fans while reinforcing Canal position following its acquisition of MultiChoice. Now we see the African Development Bank. They've approved $35.4 million in financing to help Senegal strengthen its public finance management as the country works to restore fiscal stability. Amid mounting debt challenges, the funding will support domestic revenue mobilization, improve transparency, and advance structural reforms, reinforcing investor confidence as Senegal continues discussions with International Monetary Fund over a new financial assistance program. That we see Chinese investment in Egypt that has surpassed $10 billion, underscoring the deepening economic partnership between Cairo and Beijing. The investments span manufacturing, infrastructure, renewable energy, technology, and the Suez Canal economic zone, reinforcing Egypt's position as a regional industrial and logistics hub. The latest figures highlight China's growing role in supporting Egypt's industrial expansion and long-term economic development. Let's move over to East Africa now. We see Kenya's first U.S. dollar-denominated listed real estate investment trust has posted its maiden profit since debuting on the Nairobi Securities Exchange. Alpreet reported a net profit of $230,000, supported by strong occupancy across its logistics and industrial property portfolio, despite recognizing only 2 months of rental income. The performance highlights growing investor confidence in Kenya's dollar-based property investment market. And to other parts now, Turkey, they've exported their first domestically produced diesel-electric locomotive to Africa, marking a milestone for the country's rail manufacturing industry. The DE 10,000 starting locomotive, built with 90% local content, is headed to Tanzania, where it will join the country's railway fleet. The shipment highlights Turkey's expanding engineering capabilities and growing export footprint across African transport sector. Let's flip over to the commodities market now. We're talking about stockfish. Some call it oporoko. It remains a staple in Nigerian kitchen. Despite a 30% drop in prices this year, demand is showing little sign of slowing. And the countries we import stockfish from, that's Iceland, and Norway. This is where our major imports come from. Let's look at other parts of our demand there. The stockfish market size, that's over $400 million there. The estimated Nigerian stockfish market, annual imports more than 160,000 metric tons every year. You guys really like stockfish. Let's look at other parts now. We see the market there for the key data. January 2026 price, medium-sized stockfish about 15,000 naira. August 2026 price, 11.5. That's about a 30.4% drop there so far yet today. Joining me now, let's talk to Ayobami Olatunji, analyst with Financial Derivatives Company. Great to have you, Ayobami. So we've seen the prices, they've dropped 30%, but I believe the prices are still quite elevated, right now. How would you describe demand so far?
Yes, thank you so much for having me, Mr. Ladi. So yes, it is true that the price of stockfish has decreased by over 30% from year-to-date, from 15,000 naira in January to 11,500 naira in July. And this is because of the naira stabilizing. Right, naira stabilized in the first half of 2026, by 5%, and that has reduced the landing cost of importing stockfish, right? And coupled with the fact that there's increased supply of stockfish heads, right, in the market, because that's the more affordable option compared to the medium-sized stockfish, and that has also put downward pressure on the price. But demand still persists because even at 11,500 naira, right, stockfish price is still elevated. So stockfish, to the Yoruba people is known as panla, to the Igbo people is known as oporoko, right? And it is culturally inelastic because, for one, right, it is an ingredient that must be present in traditional meals, right? Your edikaikon, your bitter leaf, your afang is incomplete without the stockfish. If you serve guests, they are going to notice. It's just something, it is necessary, right? Not just as an ingredient, but as cultural significance, as a culturally significant input. For instance, in the Igbo and Ibibio culture, stockfish is important because it's one of the marriage lists that a groom must provide as bride price. So stockfish is not just, an ingredient, but it's a culturally essential input in Nigerian homes. So demand will persist, even as prices are elevated, although we see a shift in demand to, other parts of stockfish. Instead of getting the whole one, we see people ordering parts, purchasing parts like the stockfish heads, which is more affordable, right? But stockfish there's no substitute to stockfish. There's nothing that can replace stockfish.
Right, and I guess, if a man wants to show love to a woman you want to marry, you need to get some really big, stockfish there. But we're seeing the imports, they're over 160,000 metric tons every year. Does this level of dependence pose a strategic risk, particularly for foreign exchange?
No, I don't think it poses a risk to foreign exchange because, number one, the market is worth $400 million, which is marginal compared to our external reserves of $52 billion. So even if there is a risk to foreign exchange or balance of payments, issues, the government will have to weigh certain things such as, the fact that stockfish is consumed in many households in the southwest, southeastern region, which are also key, electoral regions. So, and there has been pushback, right, because this has happened before, actually, within the region of 2015 to 2023, there was an FX restriction on stockfish, actually. But the reason why that's failed was because there's no substitute to stockfish. We can't produce it here. We just have to import. But it poses little risk to foreign exchange because it's very marginal for it.
Yeah.
So, yeah.
All right. Well, we'll keep tracking those prices. Thank you so much. Ayobami Olatunji, analyst with Financial Derivatives Company. Thank you so much.
Thank you for having me.
All right, let's flip over to the markets now. Let's see. Let's try and feel the pulse of the markets on the continent there. We see the NGX marginally down about 3 basis points, still holding on to the 245 25,000 level. It's been in red at intraday at some point, but now we've managed to flip to the green side. Financial services are down. This is the only first holdco in the green. For the insurance counter, there was also pressure there for most of the counters, that we track today. Meanwhile, we did, get a check on some of the billionaire moves today, and it's actually the chairman of Boyle Groups is celebrating about 66th birthday today. The third richest man in Nigeria. 2 listed companies there he chairs, worth over 20 trillion naira in market cap. So definitely would like to always check on the billionaires at this point. All right, let's flip over to Middle Eastern markets now. We see major Gulf stock markets. They rose in early trading today as investors, assess conflicting signals over possible U.S.-Iran talks, while upbeat corporate earnings provided additional support. Dubai's main share index advanced by 0.8% there, 1.59 higher at intraday. Abu Dhabi index 1.26%, moving higher from the earlier rises today. In Abu Dhabi, we gained about 0.7% earlier in the day. The Tadawul 0.27%. Then in Saudi Arabia, we did get Saudi Aramco's earnings that pushed up the counter. Saudi Arabian mining also added to that rise there. Qatari index 0.13% lower, 10,120 points. Let's flip over to U.S. markets now. We see stock futures moved higher today, fueled by strong quarterly results from companies such as Caterpillar, Palantir Technologies, as oil prices dropped amid optimism that a U.S.-Iran peace deal could be on the horizon. So we see it's mostly green right there for the U.S. stock futures. Flip over to Asian markets now. We see the Kospi there recovering 1.62% higher, 6,358 points. The Hang Seng Index, that was a drop there, 0.60%. Flip over to other parts of the market now. We see for the Nifty 50, it was making a run for the 25,000 level, but it's down 1.25% to close today. So that's the color right there in Asia. But let's flip over to Europe now. Let's see what's happening in Europe. We have Lars Holter right there. Hello, Lars. What's the color over in Europe?
Yeah, hi Lade, it's good to be with you today. It's all green here, I can tell you. European markets up once again, and that's especially interesting for the DAX in Frankfurt, because after a late afternoon rally yesterday, the DAX actually closed just a tad over 26,000 points, and that is an all-time high. And now we're actually putting some more points on that, which is really not that easy to explain these days, as we're obviously having lots of problems still with the economy. And earnings season so far has really been a mixed bag at best. Just today we're seeing weakness in Lufthansa, the German flag carrier, and it's obviously due to high prices for jet fuel. Now, much of what drives markets and the economy these days is obviously about oil and fuel prices, so not entirely clear where the market is taking this strength from. But here we are with the DAX up, as well as all the other European indices as well, in London and in Paris and in Madrid.
All right, let's look at the steel sector now. Germany has traditionally had a strong steel sector, but recently it's been under transformation. And, we also see there a new study says it might not work. What can you tell us about this?
Yeah, it's true. Steel has traditionally been a key industry for Germany, with the biggest plants located in an area called the Ruhrpott that is situated along the river Ruhr in western Germany, in a region that's rich in resources, not least of all coal, and that is obviously needed for steel production. However, for years now, the steel industry has been forced to undergo a drastic transformation. It's long been clear, and it's also well accepted within the industry, that these old traditional blast furnace production of steel, that has no future, because it is just extremely high in CO2 emissions. And so companies have started to switch over to producing green steel by phasing out coal and using gas initially, then and later in the process also hydrogen. German steel makers as well as the government have poured billions into this transformation. Now we're hearing from PwC in that study that this technology is unlikely to be competitive for Germany in the long run.
So why not? What is the problem for German producers then?
Yeah, so the consultants analyze steel production cost, and they say that while global competitors have leveraged the climate-driven need for transformation to really make technological leaps, Germany and Europe are still more caught up in a fight to secure their place in the global market. Now, looking at the cost, it's pretty clear that energy and labor costs are the two major factors, especially in Germany. And the study says that India, the Gulf states, for example, they can build direct reduction plants. That's the more climate-friendly alternative to these old blast furnaces. They can build that at significantly lower labor costs than Europe. Also, sunny countries can produce climate-friendly hydrogen from solar power at a much lower cost, which is also why even import tariffs on foreign-made steel won't really solve the problem for German companies, because even without the global competition and just dealing with EU-based competitors, German firms still lose out versus steelmakers from Scandinavia, because hydrogen there can be also produced pretty cheaply.
So what's happening now, after so much money has been spent?
Yeah, that's a good question, Ladi. Now, solutions are desperately needed because tremendous amounts of money have been invested, including, of course, taxpayer funds. As a matter of fact, just the big three among the German companies, that is ThyssenKrupp Steel, Salzgitter, and Stahl Holding Saar, they have received more than 5 billion euros in state aid to transition from blast furnaces to the low CO2 steel production. And rightly so, as the government here in Berlin has made the transformation of the steel industry a flagship project of its industrial policy. But it seems the only part of the steel business that could be competitive in the long run would be around those products and manufacturing processes where, and I want to quote from the study here, where the know-how component of the product's value exceeds the value of the material. Now, that means that anything that has simple processing steps like rolling and stamping and bending or cutting steel could easily and will likely take place where the material is produced, and that won't be in Germany. Instead, they say German firms should focus on customer-specific solutions and specialty steels, because that is where the German company's expertise counts.
All right, thank you so much, Lars, and definitely I hope we'll see some action at the markets in Europe soon. Thank you.
Yeah, thank you, Ladi.
All right, let's flip over to digital assets now. We're seeing green on the screen for most of the cryptocurrencies there, with Bitcoin there holding up 2% higher. Ethereum trying to make a run back to $2,000. Maybe it can, reclaim that at some point. But it's green on the screen right there for digital assets. Maybe risk on sentiments right now. Let's get some of the headlines. See, Nigeria, they've introduced a 1% withholding tax on cryptocurrency transactions processed through digital asset exchanges as part of new virtual asset tax guidelines. So let's look at some of those guidelines. Now, talking about a cryptocurrency tax, at this point, the NRS did drop some guidelines. You can put that up for me. You see the first one there, mandatory tax registration for virtual asset operators, reporting of crypto transactions to the tax authority, proper record keeping for all virtual asset activities, standardized market value valuation of digital assets, taxation of profits and gains from cryptocurrency and other virtual assets under the Nigeria Tax Act 2025. Let's bring in Olumide Additional now, financial market analyst. Hello, Olumide.
Hello, Raji. It's great to be on the show.
Great to have you. So it's finally upon us at this point. Crypto taxes are here. We have guidelines at this point. How's the crypto community reacting to this?
Of course, it came as a shocker in spite of the fact that we understand that the President Tinubu's administration is all out to amplify revenue, particularly from non-crude. And we understand the role that taxes play in terms of infrastructure development and social security. However, you need to look at both cases. So first of all, the federal government's argument is simple. Nigeria transacted about $92 billion worth of crypto assets in mid-2024 to last year, according to chain analysis. And if you look at the fact that Nigeria accounted for about half of those inflows in sub-Saharan Africa, And Nigeria really have a youthful population that is really adhered to Bitcoin, Tether, popularly known as USDT, and other stable coins. You're not going to be surprised why the Nigeria Revenue Service is trying to get a bite into that. But the issue is that it also creates a problem in the space where you're trying to grow an economy where unemployment is at the highest level, and also economic consumption has moderated deeply based on the fact that the consumption power of the average Nigerian has dropped despite macro improvements. So what this means is that, we have few registered crypto exchanges in Nigeria that really implement this policy. And surprisingly, most of the crypto exchanges Nigerians use are not regulated. So they are giving incentives for those that are not regulated to take more market share. And also, crypto is one of the few assets that it gives the option for you to go on a decentralized exchange. Decentralized exchange simply means a platform where you could make transactions without putting your ID. So, Ladi, it's a very funny approach for me, because I said it's funny because I don't see how the Nigerian Revenue Service can implement this properly. I felt that they should have done a stakeholder conference like the way the Security Exchange Commission has done in terms of regulating crypto assets. I think for me, it's going to just add in Nigerian youths, and the compliance will be very low.
Yeah, so you don't expect much compliance with this, and I'm sure also this market has not seen a bull market in the longest time. Maybe if there was a bull market, there'll be more. Maybe we might see more compliance. Maybe if they've made some profit, at this point. But that aside, so these are the guidelines at this point. What do you think can work here, or can help, for compliance?
I don't even think it's because we're not in the bull market. Because if you look at transactions, Nigerians are really increasingly using stable coins, like the USDT, and these assets are because of the free access to foreign exchange. The issue here is that how do you define because if you look at some of the rules, you are not taxed when you transfer to yourself. So, for example, if I use a non-custodial wallet, how does the Nigerian Revenue Service understand that that's my own? And you also need to look at the participants in the Nigerian ecosystem. How many Nigerians use Nigerian regulated crypto exchanges? The latest data shows that the major players in the crypto space are not regulated by the Security Exchange Commission of Nigeria. That is an issue. So we have a legality problem, we have compliance problem, we have the reach problem, and I feel that the federal government has created some form of bad optics around this because, if you understand the fact that the dynamics has been changing towards innovation, where a lot of people are using stable coins to create new technology, and we're seeing that in the fintech space, that might really erode those gains and push them to friendlier countries like Ghana or South Africa.
All right, definitely these are guidelines. I guess you try and track your compliance and how they're going to, execute this. But, going forward, what advice would you have for, traders, at this point with a guidelines like this?
Definitely, it's advisable to stick with the law. You won't want to be abreast against the federal government. But I think for major players, particularly those that run heavy volumes, I won't be surprised when they move to decentralized exchanges. I also feel that investment in that sector will be capped because of the fact that investors will try to see the upsides of their returns around that. But basically, I think the space is evolving. I don't think this is the last of it. I think the Nigerian Revenue Service might update in future when they see the back and forth. I think we have a government that might that show they listen to people. So I expect that there will be an update on this rollout.
All right. Always, seems so difficult trying to wrap your head around, taxing crypto and digital assets. But we'll just keep watching at this point. Thank you so much, Lumide Additional. Thank you.
Thank you for having me.
All right, so those are the top stories right now in the markets and right here for digital assets in Nigeria. Keep it here. Definitely will bring you more information on what direction to go in most of these markets. Thanks for watching Business Incorporated today. I'm Vladi Williams from the team right here at Channels HQ. Bye for now.